What if I told you that most traders lose not because they don't have a strategy, but because they keep firing entries with zero context of what the higher time frame is doing? And what if I also told you that one single model executed with discipline can turn your entire trading career around? Today I'm breaking down my full day trading strategy, the 1 minute kill shot. A repeatable, systematic model built on higher time frame bias, precise liquidity reads, and clean, obvious draws on liquidity. This is the video I wish I had a year ago. If you stay until the end, I'm going to show you an actual live kill shot trade step by step so you can see exactly how it works in real market conditions. If you've been struggling with consistency, blown accounts, or you're tired of almost catching the right move, this video is going to fix that. Let's get into it. What you must know before learning the kill shot. Before we can even talk about entries, you need to understand the language the market speaks. The kill shot combines several concepts you've probably heard, but most traders misuse, and we're going to make sure there's no confusion. Key terms you must understand clearly. We're going to give you some short, simple definitions. Discount and premium. Discount is the buy zone inside an impulse range. Premium is the sell zone inside an impulse range. You do not want to be doing the opposite of these. If you're buying at a premium or selling at a discount, you're immediately making your trade a lower probability setup. Impulse ranges. This is the major leg of market structure. We measure where price pulls liquidity from and where it wants to deliver to next. This is going to have displacement and it's going to be a large leg down or up. Liquidity. These are the breadcrumbs left behind the market we're going to try to go and eat. Month and week high lows, day high lows, session high lows, equal high lows, and lower time frame swing points are all key areas we're looking for. These show you where price wants to go to next and great targets to find entries or exits. Fair value gap. You need to know this one. Fair value gap is an imbalance where price has left an inefficient delivery or an imbalance. This is where three candles are aligned together and leaves a gap between the wicks of those candles. You can see the example on the screen. Inverse fair value gaps. This is a very important one because this is what we use to actually enter our 1 minute kill shot and is the trigger. This is a bullish gap used for longs or a bullish gap used for shorts. An inverse fair value gap is when a candlestick disrespects a bullish or bearish fair value gap. As you can see in the examples to the right, you can see that price has closed through a fair value gap disrespecting that candle. Liquidity sweeps. Again, one of the most important concepts in this strategy. This is a manipulation that clears out traders before price reverses or continues. If you understand these terms, the rest of this video becomes very clear. Higher time frame daily bias. If you skip the higher time frame, your results will always be random, and that's where you get gambling from. The daily chart gives you the macro narrative, the bigger picture, and the highest confluence trades. Ask these two questions every morning before you do your analysis and before you start trading. Are we delivering from buy side or sell side liquidity? Meaning, which liquidity pool did price take out last? Was it a fair value gap? Was it a day high low, a week high low? The second question you should be asking is, are we respecting or disrespecting bullish or bearish fair value gaps? When bullish, price respects bullish fair value gaps and disrespects bearish levels. And the daily draw will tend to be upward. Price will be looking like it wants to target higher prices. When bearish, price respects bearish fair value gaps or bearish levels and disrespects any bullish fair value gap or bullish levels. This will cause the draw to go downwards and target lower prices. The daily bias is not optional. This is your foundation to the day of trading. This does not mean we cannot take a trade opposite of the bias, but we must always remember the overall bias when taking trades to shoot for proper targets and not get too greedy. This is a must do every time you trade. The 4-hour and 1-hour impulse ranges. This is where we kind of refine and zoom in on the narrative of the actual day. This could be where maybe we shoot for an opposite trade against the higher time frame bias because lower time frame maybe looks opposite to the daily. On the 4-hour, we identify the current impulse range, where the impulse begins, where it ends, where it pulls liquidity from, and where it might go and target. The 4-hour shows you the engine of the trend. It's going to give you those nice points of interest to target, like fair value gaps, higher time frame points of interest like session highs and lows and things like that. On the 1-hour, we find the bridge between the intraday narrative and the higher time frame story. You might see that maybe a long works even though the day trend might be bearish, or this might also look like when we could go short even though the higher time frame might be bullish. It gives us those intraday moves that we can capitalize on. Here's some questions to ask yourself. Where is the premium and where is the discount. Which fair value gaps or order blocks are being respected or can be targeted in these ranges? Where is the intermediate highs or lows inside that range, like 15-minute or 5-minute highs and lows? These impulsive structures are crucial because the kill shot must align with them. They cannot unalign. We never ever fade the 4-hour or 1-hour impulse range. I want to take a quick break, and this one's actually important if you're serious about becoming a consistent trader and wanting to lock in some serious profits. One of the biggest mistakes I see traders make is trying to build consistency on a tiny personal account. It's not realistic, and it forces you into bad habits like over leveraging or forcing trades, and then you're losing your actually hard-earned money. That's why I personally recommend and also get funded through Apex, especially right now. They are running one of the best deals I've ever seen. I think they're the lowest in the industry right now at the time of this recording. You can get 80% off your evaluation plus a flat $40 activation fee. You can get a 50K for around $70 in total. Use code Maniac to lock in this discount when you go and sign up, and use the link down below. Now let's get back into the strategy. Identify your key footprints. You need to know where we are targeting in the intraday pool. This is where you locate levels that matter most intraday. Here is a list of footprints you always mark when doing your pre-market analysis. You want to mark out previous week high lows, day high lows, session high lows from Asia and London if you're trading in the New York session, because that's when I trade. The 15-minute fair value gap, intermediate high lows sitting inside gaps especially, and unfilled imbalances between the M15 time frame all the way up to the monthly time frame. We want to know those fair value gaps that haven't been touched. What do these levels do for us, and why do we point them out? They're potential reversal points, targets to take profit, magnets for liquidity to move down to or up to, areas where price must interact with before the kill shot setup forms, so places we're going to be patient for price to come to. When you're wrong in trading, it's almost always because your footprint narrative was wrong and you weren't patient enough to wait for price to go where you need it to go. This eliminates that completely. Step 4, the kill shot confluence checklist. This checklist should be on your screen, written down next to you every single time you go to take this trading model. This is where the strategy becomes mechanical and easy to follow, and where you erase all emotions or feelings from the market and you just execute. You should follow this checklist to a T and never go against it. In order to take a 1-minute kill shot, you need 5 confluences to activate it. Here are the 5 exact confluences you need to do. 1, it needs to be in line with the higher time frame bias. This could be with the 1-hour or 4-hour bias or the daily bias. The highest probability trades are in line with our daily bias, and the next highest probability trades are in line with our 4-hour or 1-hour ranges. Be aware if you are going against the daily bias to lower your expectations of the trade and shoot for the lowest possible targets. Don't get greedy here. The second thing on the checklist is, are we selling from a premium or buying from a discount? This is not optional. You must be doing one or the other. If you are going against these, your trade just dropped to a very low probability trade opportunity, and you're most likely going to lose. We said this before and we will say this again. Do not sell from discount or buy from a premium. Wait for price to go where you want and do not chase that price. The third thing on the checklist is, are we at a higher time frame point of interest? In order to enter a trade, we need to be at a place of interest to solidify that we are at a proper point for price to reverse or continue. Are you in that higher time frame fair value gap we've been looking for? Are we at a session high or low? If not, we wait for better opportunities. We do not chase, we let it come to us. The fourth thing on this checklist is a M5 liquidity sweep or a 5-minute liquidity sweep. We need manipulation first. This means price must sweep a key footprint level on the 5-minute chart. A key level could be Asia high low, London high low, previous day, week, or month high low, a 5-minute or 15-minute high low, or a 5-minute or 15-minute high low. This sweep is the kill shot chambering, and it fuels that reversal or that continuation to get shot through. The last thing you need in this checklist for number 5 is an M1 inverse fair value gap, a 1-minute inversion. After the sweep, price must create an inverse fair value gap on the 1-minute chart. This is your sniper entry. For a long setup, you're looking for a bearish fair value gap to be inverted, where price closes above a bearish fair value gap. For a short, you're looking for a bullish fair value gap to be inverted, where price closes below that bullish fair value gap. Another very important thing in this is, where does the stop loss go? This does not change, and it always goes below or above that manipulation leg. So wherever we swept liquidity, that's where you put your stop loss. Now, what's the entry method? There's two ways. You can either market entry or limit entry on those inversions, but only after the candle closes, confirming the inversion on the 1 minute time frame. The kill shot targets. This is extremely important because if you're going into a trade and you have no idea where you're going to target for your take profit, you should not be taking that trade. You need to have clear targets and always target those, and do not move them once you have targeted your profit levels. Your targets must be as high probability as your entry. Here is a list of some of the best kill shot targets I use every single day. Before we jump into the live kill shot example, that's what's coming up next. There's something you need to hear that I would like to share with you that helps you become a better trader. One of the secrets behind traders who actually make it to profitability isn't that they have a better strategy, it's that they track their strategy and they practice their models. And the only tool I use for journaling and backtesting, the only tool that's made a measurable difference in my performance, is TradeZella by far. TradeZella gives you automated journaling where you can link your broker, screenshots and tagging so you can journal every single trade and session you do, detailed analytics on every single trade you take, a clean backtesting suite to see if you're getting your model proper, and the ability to see exactly how profitable your strategy truly is. If you want to know whether you're executing the 1 minute kill shot correctly, TradeZella will show you every mistake, every strength, and every pattern in your trading. With code Maniac, you get 20% off your subscription with the link down below. It's the best discount available. All right, let's get into the live kill shot example on the charts. This morning, the same day I'm recording this video, we had an amazing 1 minute kill shot. We actually had two 1 minute kill shot opportunities. We're going to break down both of them, show you why we went long, why we went short, and give you a complete pre-market analysis also of what I do to prepare for what positions I'm looking for and what positions I should ignore. So we start from the monthly time frame and work our way down. We want to mark out some monthly lows, monthly highs, and monthly key levels. As you can see here, there's an untapped monthly high over here. There's a monthly low also below us, and we just tapped into a monthly low. We are also in this monthly fair value gap. It's small, but still significant because it is a fair value gap. Now let's go down to the weekly time frame on NASDAQ here, and let's see if we can get some more key levels. We have weekly high above current price. And then as you can see, price is coming into this area of interest and also into lower weekly fair value gaps. So we can remove this monthly fair value gap and tag in this weekly fair value gap that we see right here that price is attacking. Also below this weekly fair value gap, we also have a weekly low that we're going to mark out. On these higher time frames, right, on the weekly and monthly, we are looking bearish. The weekly time frame is below some of these lows here. We've inverted this weekly fair value gap. We are bearish on the higher time frames. And as we look at the day time frame, we can also see that price has been respecting bearish footprints. We have this day fair value gap right here, and as you can see, price tapped into it and pushed off of it, and it looks like price wants to come down to this weekly fair value gap. What I also notice here is that the day time frame has this impulse range here where we've pushed up, then pushed down, displacing, making a fair value gap, and we have yet to really see any kind of retracement into premium to target lower prices. Now the narrative's shifting a little bit. Okay, maybe we can target some higher highs, right, to target this day fair value gap before we target lower prices, which would say, hey, maybe we can take a long here rather than just looking for shorts as we get into those lower time frames. But still, we need to remember the higher time frames are bearish. We can't shoot for external range liquidity or these highs because we have this massive, very important footprint here on the day time frame that price is most likely going to respect. So now that we have not only a day footprint marked out, a clear understanding of the bias, let's drop down to the 4 hour and get some more important range information for our trading day. So now we have this 4 hour range. As you can see, we had this 4 hour impulse range that price came into discount on or premium to then target further. And we have this other 4 hour range here. But then remember, the more important range is this day range that we need to come and attack this fair value gap. So let's go down to the 1 hour time frame to get some more important information as we come to New York Open when we come to trade. Now, as you see, when we get into the 1 hour time frame, look what is happening on the 1 hour. We have this impulse range that is looking very bearish, and we're getting really close to that day fair value gap that we've been watching and wanting price to attack. So let's also mark out this 1 hour range. Okay, 1 hour range has some good impulse. It looks like it's still wanting to target this day fair value gap, and also it has some footprints down below us that we can target if we're able to get short opportunities. So let's mark out some of these higher time frame footprints. This H1 fair value gap that is in discount. Now that we have a clear understanding of the 4-hour range, which is bearish, and the day range, which is bearish, and we have a clear understanding of the 1-hour range, which is bullish, heading towards our higher time frame points of interest, which is that day fair value gap, we know potentially we can target some longs, but not going for too far. We just want to target this day fair value gap. And then the really important move we're looking for is a short opportunity to target external range liquidity down below us on the higher time frame, like the day and the 4-hour. Now, the last thing we're going to do in the 1-hour time frame is mark out our session liquidity. This is the exact way I mark out my session liquidity every single day. And as we're looking here inside this 1-hour time frame, we see Asia low is untapped and London low is untapped. So there's a liquidity below us that we can target, Asia low and London low. So now let's get down to the 15-minute time frame and see if we can sharpen up some of these fair value gaps and footprints we want to target. We have this untested 15-minute fair value gap right there. We're going to mark that guy out. And then we also have another untested 15-minute fair value gap that's in discount of our 1-hour range. That's me one we definitely want to see price come and test. And as you can see, 15-minute time frames looking like it's almost to that day fair value gap of something we can target and really take advantage of. We have our 15-minute key levels that we're looking for, these 15-minute unfilled fair value gaps. We have session highs and lows from Asia and London that are key areas we can target for if we're able to take a short opportunity. And we also have key levels we can target if we're able to take a long opportunity to this day fair value gap. Let's get to market open and let's go down the 5-minute time frame where we'll look for some confirmation of 5-minute liquidity sweeps and then 1-minute inversions. So this next candle I'm about to show is the market open of today, November 20th, of the day we were able to take some of these trades. Let's see what happens. Market opens and immediately what I see on the chart is we have this 5-minute low to the left here. Inside also a 5-minute fair value gap. Remember, our 1 hour is still looking like it wants to target this day fair value gap. And this is the level we want to see price attack before we go short and attack London or Asia low, right? As we're getting this rejection of this 5-minute low, we can go down to the 1-minute and see if we have any fair value gaps that have been inverted or about to be inverted. Let's go to the 1-minute time frame. I see this fair value gap right here on the 1-minute. Price has rejected this 5-minute low. We have a open bearish fair value gap that we can come in and invert to take a long to target this day fair value gap or potentially higher. We'll see what price delivers in the next 5-minute candle. Price is failing to displace this low, but I don't think it's inverted our 1-minute fair value gap yet. Nope, we've tested it, but haven't inverted it yet. Let's see what the next 5-minute candle gives us. Another wick below this low, failing to displace that low, giving us more confirmation to the upside and giving us a 5-minute order block out of this 5-minute fair value gap. Again, more confidence to say we should go long here. And look at that. The 1-minute time frame has inverted this fair value gap. So let's go back one candle. We're going to put some of our targets in, okay? And we're going to see if this trade wins or loses. We can either do a limit buy here or a market buy. We're going to do market buy on this example, but a limit buy, you would put it at the top of this inverse fair value gap. But for right now, let's just do market buy. And for me, when I'm trading my funded accounts, I trade 3 MNQ and stop loss will go to the bottom of this manipulation. So we're in, stop loss goes to the bottom of this manipulation, confirm. And then our first take profit, right? When we look at our checklist of where are our targets, we do not enter a trade unless we have targets, and we have 2 clear targets right in front of us. We have this 5-minute high here that we can target. We're gonna do a sell limit of 1 contract there. And then we also have this unfilled daily fair value gap that we're gonna put a sell limit at that unfilled day fair value gap. Now we're also gonna leave a contract. So that's 2 TPs that we're gonna take, but we're gonna leave a contract on to see if maybe it goes even higher to some of the deeper into this day fair value gap or other levels that we can find. We'll be prepared that either way, we're going to lock in the little profits we know we can without getting too greedy, because again, the higher time frame is bearish. We're not really expecting to go much higher than where we currently are right now. All right, let's see how this trade plays out. And we're going to go candle by candle to see if we get take profits and how they are hit. Our first TP hit. Now we have our stop loss move to this 5-minute order block. Let's see if we can get another TP to be hit. The next candle then taps our TP, and now we are down to 1 last contract. We're going to move our stop loss now because we've hit both of our TPs. We've gotten really good displacement and large 5-minute candles. We're going to see if we can even go even further on this trade. And then you're stopped out at break even on that trade. Now look at price is now really starting to show some displacement to the downside. Now, this is not where we go short. This is not the candle that we go short on. We wait for price to come back up to this fresh M5 high that was just formed, where we just took our TP in this day fair value gap. Because what has price done? It's tapped our higher time frame point of interest, this day fair value gap here. So let's see if price comes back to this high and what it will give us. Okay, price right here on this candle hit this high, and look what it's failed to do. It's failed to not only close further into the day fair value gap, but it's failed to close above this 5-minute high. Let's go down to the 1 minute, and do we have any fair value gaps that potentially could get inverted on the one? We do have this 1 minute fair value gap right here that if it gets inverted, that is our signal to go short. Let's see on the 1 minute time frame, do we get an inversion anytime soon? The 1 minute time frame has inverted this fair value gap. Now, what's also important, let's check the 5 minute. Has the 5 minute closed above this high? No. Look at what it's done. It's failed to displace this high. Not once, not twice, but 3 times it failed to displace it. And now we're getting a large move down. This is our signal that now we go short. Okay, so we're going to go short here. We're going to market sell 3 contracts. What you could also do is put a limit sell at the bottom of this inverse fair value gap, but we're just going to do market sells. Stop loss is going to the top of the manipulation. So we're putting stops at the top of this manipulation. Where do we target? Some of our first targets are this M5 low down here. So we're going to set up a buy limit of 1 at this M5 low here. We're going to target this M5 low also. We're not going to be greedy. We're going to take what we can, and then we're going to let one contract run to see if we can really get a good move here. So we're tapped into this trade. We're in. We've market sold. Let's see if we can catch a good trade here. Both TPs have been hit. What you can do is, now that you've been able to take those off, let's move stops. You can either follow 5-minute displacement or move it to break even. For me, the fact that both my TPs have been hit and I'm up quite a bit of profit, I want to follow some of that 5-minute displacement. So this is the nearest fair value gap we currently have formed. I'm going to put my stops to the top of this candle, and we're going to see, can we just let it trail and let it run? Let's trail to that 5-minute order block now. And this looks like you're about to get stopped out. That trade ended up making you $2,315 on this day with 2 trades that you're able to take, only trading 3 MNQ contracts. And that's the power of paying attention to the 1 hour and 4 hour ranges and that daily bias. When you're able to follow the trading models and you're following the bias of where trade goes, it makes it so much easier to take high probability trades that are on your side of the market. Now, this trade is an exceptional move, but also we even took a small win over here on this little long that was targeting the footprints we were looking for. Final mindset shift. You can know this model perfectly, but if you overtrade, add during your drawdown, skip the higher time frame bias, trade outside the session you're supposed to, or take setups before the sweep happens, then no strategy in the world will fix your results. You must fix your discipline. You must execute like the trader you want to become before you actually become that trader. After you're done watching this video, please act like a profitable trader today, and you'll end up becoming one much faster than you think. If you found value in this video, hit the like button and drop kill shot in the comments below so I know to make more deep diving strategy videos like this. Make sure you go put in the reps and practice this model before you take it to the live markets. You need to be able to execute without even thinking. I also need you to be able to spot this opportunity fast, because the model doesn't wait for anybody. It moves very fast. If you're looking to get funded and need some help, use this video recommended here to lock in that next eval and get funded with Apex. I will see you in the next video.